Welcome back to another video, everyone. My name is Kyle. I am a full-time trader specializing in futures and options. I also run the premier trading community known as the Traders Think Tank. Today we have a trade recap for you looking at a trade in the index, specifically ES futures. If you are an index trader, you're going to want to see this one. I was able to capture 10 points out of ES, which is equivalent to 1 point in SPY. Let's go ahead and jump right into the charts. Okay, if you have watched any of the trade recaps before, welcome back. If you're new, what I like to do is start with the higher time frame analysis to get a big picture idea of what is happening with the stock or the market that we are trading. In this case, I always do my analysis on SPY, then I make sure everything matches with ES. It generally does with very minor discrepancies. I've always been charting SPY, and so I just tend to focus on what SPY is showing me and then translate it over into ES. If you prefer to look at ES, it's really no big deal. This is more of a personal preference thing in my opinion. So what do we have here? Now, looking back at the past 1 year on SPY, we are working on 52-week highs. Now, in the more recent action, what we have here is a range through this area. This was about a 7 to 8 week range, and you'll see a weekly pivot. So every time price tested this 415 area going all the way back to May of 22, it was knocked back down. And so we know that that 415 area is a key area. Now price put in a range, a 7 to 8 week range at the edge of that 415 area. This is generally going to be a bullish development. When you have a wide range, this is basic Wyckoff, but when you have a wide range that then gets tighter near the high of the range, this is like an accumulation base, price tends to break out of that base, and it is again a bullish development. So what you can see since we broke out of that 7 to 8 week range is a retest down into May 24th into the 412 area retest, and has not looked back since. We're now pressing 52-week highs today. But again, this is a bullish development, and I continue to repeat that just because the past week or two I have been focused almost exclusively on long ideas in the index, and I wanted to outline why exactly I am doing that. And so that takes us into more of the near-term action. I'm looking at, when I come into the day, I'm looking at the 15-minute chart, usually getting a sense of what the past 3, 4, or 5 days look like, depending on what the context is, depending on what the setup is that we have to work with. If you take a look at the notes here, this is the pre-market prep notes posted for active traders in the Think Tank every single day. We have a market outlook section, and basically what I said was the approach for today is pretty simple. Watch price reaction versus the prior day's range. There's a near-term 2-day range developing. Broader, there's a key point, broader context shows bulls in control of this market. Okay, this is a key aspect of the notes here. So corrections can occur through time via a range or with a pullback. The market is poised to open mid-range. And so with that in mind, basically I want to get a sense of what I'm looking at when the market opens. And so we basically do have a near-term range here. Yesterday was FOMC, and so there was a little bit of range expansion, but basically what I'm going to say is that between kind of this area, 434 is the range low, up into that 438, 438.5 area. And you can see we have support 435 S1, resistance 437.5 R1, up into 440 and down below 433.5 as S2. Those levels again are posted with the pre-market prep notes. And so at the open, what we can see is price is kind of fading all morning. We have some news, some retail sales news, caused a bit of a bounce here. What I'm looking at the open is how price actually is going to trade versus, let this refresh, this near-term volume point of control. So generally speaking, when you have a range, the near-term volume point of control can act as a reference point. It's not necessarily support or resistance, but it is a level of interest. it can be a pivot that you can utilize for a trade idea. So what I wanted to see here was how price traded at the open near that volume point of control, and then watch for either a move into the range low or the range high. Now, I did have a little bit of a bull bias today just based on the big picture context. Again, bulls have been in control of this market. And so what we actually see at the open, I'm going to go ahead and flip over to ES now because this is actually what I was trading. What we see at the open is a consolidation. This is the 2-minute chart on ES. Here's the actual market open. Let me bring my drawings back. We have a consolidation right at the open. Now there is a 2-minute bar right here. You have an inside bar of that 2-minute opening bar, another inside bar, and it starts to resolve higher. So a couple things that I'm noting here as I'm observing price action around this time. Number one, the opening print, which is this white line here, it is pretty faded. You might not be able to see it, but it's right through here around 4408 is being defended. This black line is VWAP. VWAP is also being defended here. So I know a lot of traders like to trade VWAP. They're going to be establishing their long somewhere in the open right here. The setup I was looking at is known as the opening range break. This is a setup that we teach in the Options Mastery course. If you want to check that out, I've got a whole write-up on a study that has actually been done showing the effectiveness of the opening range break. I'll put a link to that down in the description if you want to go ahead and read that. But basically what the opening range break says is let a 2-minute or 5-minute or whatever your preferred time frame is. I like to use the 2-minute. Let that 2-minute bar set and then go with the direction, the break of that opening bar. So in this case, the high was 4412.75. Now, again, just to take a step back here, I was comfortable doing this today because I know we had that mid-range level of interest with the volume point of control. It's not quite the same on ES. If we look at this, it was around 4413, so it was about a point higher. But in this case, I'm going to go ahead and say, you know what, close enough, depending on how this 2-minute opening range resolves, it's either going to test the range high or the range low. Now, what I did here was I went ahead and put a buy limit order at the 1 tick higher than the high of this opening range bar. So the high was 4412. I had my order at 4413. I'm looking for about 10 points out of this trade. You can see the actual executions right here. Here's the entry, 4413. I took a small amount of heat on this trade and I start to scale out my profits into strength of the move, taking the final sell at 4423, locking in the 10 points of profit on ES. Could I have gotten some additional upside here? Yes, but I was fully expecting a pullback after this kind of shooting star candle. It never materialized. I could have used a 2-minute trailing stop method to take myself out of this trade, which would have had me in the trade all the way up into this 4430 area, an additional 7 points or so. I don't really care about that. I'm just trading my system here, looking for base hits every single day to stack gains. Hope you guys found this video useful. If you have any questions, feel free to reach out to me in the Traders Think Tank or leave a comment below, and I will see you in the next one. Thanks so much for watching.